Make better money choices. Choose a bank that takes your money seriously. Business Watch is brought to you by Nedbank.
All right, it's just gone 2 p.m. Central African time. It's a very good afternoon to you and welcome to this edition of Nedbank Business Watch. I am your host, Sifiso Ngumala, and today's show, very packed with essential updates that are going to affect how you manage your finances as well as your business operations. In our first segment, we're going to explore Nedbank's cutting-edge solar financing solutions, which is a critical step towards making renewable energy more accessible across the board. We'll delve into how these specialized loans, competitive interest rates, as well as comprehensive insurance offerings can help you make the transition to solar energy with ease as well as confidence. Later, we'll turn our attention to a significant development in cross-border electronic funds transfers within the common monetary area. Come September 10th, a new system will be implemented that promises to speed up as well as to streamline cross-border transactions. We want to unpack the details of this change as well as discuss what it means for individuals and businesses alike, particularly in the context of policy collections and digital payments. The Treasury Sales Department from Nedbank will then join me to decode the indices of the day on our markets update to close the show. A comprehensive agenda for you this Wednesday, designed to keep you informed and ahead of the curve. So stay with us as we navigate these important topics together. A lot more that I haven't said here on my opening that you ought to listen to as we give you insights on the show today. Let's start the show by looking at business news today. 2 minutes after 2. Thank you for staying with us. You're still watching Nedbank Business Watch. Let's look at our business news. The Minister for Finance, Honorable Neil Reichenberg, says Eswatini no longer has a high fiscal deficit, and this boosts investor confidence. The Honorable Minister says this means that the country is doing well in paying her debts. There's a report.
At the moment, the GDP is around just above the 90 billion emalangeni mark. And so our fiscal deficit now was 7.5% of GDP, was the gap between. Now, the problem with a fiscal deficit of 7.5%, it means that the country is taking on a lot of debt every year to be able to just keep the lights on, to keep up with the expenditure that we are having. You're filling that gap with debt. And unfortunately, our debt to GDP ratio, which is normally how you measure debt, because it's one thing, a big country can have lots of debt, a smaller country can have a little bit of debt. So you manage that in what you call the debt to GDP ratio. Our debt to GDP ratio was 7-8 years ago, around 20%, about 10 years ago actually. And right now, in fact, as we sit here, it's around the 36%, but we're trying to keep it. It did peak at about 40%, and we're trying to keep it below 40% is really our current target and the goals we're trying to do. It was always around the 35, but we're seeing what we can do to try to make sure it doesn't go above the 40. And 40% debt to GDP ratio, if one looks at all the other countries, it is very healthy space for us to be able to operate in. Still meaning that we're paying way too much on interest on an annual basis, but we're not taking it into levels that are unsustainable. So from that point of view, we believe that we are on a decent track. Now, what we managed to do over the years was to reduce that fiscal deficit. In fact, right now our fiscal deficit is, I think, 1.96%, and that's according to Eswatini's numbers. And that is even higher than what the World Bank is saying, because at the moment we are putting money into a SACU stabilization fund, which we are taking out before we count the fiscal deficit. But the World Bank, IMF, for instance, they are saying, no, that money is part of this year's revenue, you should count it. So according to them, our fiscal deficit is around 0.4 or 0.3%, which is very low, and really meaning that the country, below 2% even, is what they call on a sustainable path, which means that our debt to GDP ratio is not growing. So from that point of view, over the last few years, we've really managed to get ourselves into sustainable territory. Now, what we are finding as a country is being in sustainable territory also gives confidence in the economy. And so we are finding that many of the investors, many of our domestic companies are actually finding a lot of comfort in the fact that the country is no longer got a high fiscal deficit. Because the problem with a high fiscal deficit means if your debt keeps on growing, at some point your country battles to repay debt, you go into debt default, or you run out of foreign reserves. And either of those is an absolute nightmare for a country, because if you get to that stage, it means that even if you're making money in the country as a company, you can't take the money out of a country, and then it doesn't really help that much.
The Umhlanga Residence visitors shot up by 25.1% this year when compared to last year. This is contained in a statement by the Eswatini Tourism Authority. We do have a report.
The Eswatini Tourism Authority says over 32,000 travelers visited Eswatini over a 4-day period from the 29th of August as the week approached the Umhlanga Residence main day of the 2nd September, reflecting a 25.1% increase compared to a similar period last year. The Umhlanga Residence happened alongside the Swazi Rally, an annual biking event, and the Eswatini International Trade Fair, as well as the one-day hike at Malolocha Nature Reserve. The Eswatini Tourism Authority says source markets accounting for the significant rise in visitations were the neighboring markets, which are South Africa, recording a growth of 34.4% of the arrivals, and Mozambique with an upsurge of 23.5% of total visits. Additionally, other markets where visitors came from include Zimbabwe, the United States of America, Lesotho, India, Germany, and Malawi. The Ngwenya border post recorded the highest volume of visitor arrivals with 12,867 visitors using this point of entry. The numbers were, however, not impressive on accommodation, according to the authority. While the number of overnight guests was considerably high in 2023, an average occupancy declined by 6.9% from 75.5% in 2023, as a majority of overnight guests opted to room sharing, signaling an effect of inflationary pressures. The continued increase in inflation rate resultant from geopolitical tensions and conflict in oil-producing nations has had an adverse effect in reducing the purchasing power of consumers and consequently altering decision-making for travel and, in particular, leisure travel. Hotels, according to the authority, registered a room occupancy rate of 74.3%, while establishments that offer more personalized and homely experiences, these including guest houses and B&Bs, recorded an average room occupancy of 50.3%. By sub-region, Eswatini accounted for the highest occupancy rate at 75.3%, whilst Manzini and Babane registered 65.4% and 59.1% respectively. For Nedbank Business Watch, Nelson Langamandla, Babane.
8 minutes after 2, we'll go for a net break. We'll return shortly.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Welcome back. You're still watching Nedbank Business Watch this Wednesday. Let's enjoy the show and look at this discussion where $1 billion has been raised under the African Continental Free Trade Area Agreement, which will support as well as capacitate businesses from different countries as they trade under the agreement. This has been said by the African Continental Free Trade Area Secretariat Secretary General Wamgele Mene when detailing the plans they have put in place to ensure that the agreement meets its objectives, part of which is to see about 50 million people in the continent escaping extreme poverty by the year 2035 and real income rising by 9%. The Secretary General, who recently visited the country, spoke to our business journalist Nelson Ndlangamandla.
We have heard, Your Excellency, that the African Continental Free Trade Area will have an adjustment fund. How do domestic enterprises get access to that fund?
The adjustment fund is at the last point of discussion by ministers of trade. When the ministers of trade meet later in the year, they will adopt criteria for eligibility for the fund. In broad terms, what I can say is that the eligibility will be both for sovereigns, that is to say governments, and the private sector. And both will be able to access the fund independently. So if you are private sector, you will be able to go directly to the adjustment fund. They will have a website and they have a credit committee that will determine the bankability of the request for support. So we will not be able to determine who qualifies and who doesn't, and we should not. So the board has the adjustment fund has an independent oversight structure. There's a board which has a chairman, and they will decide. We don't influence that, and we should not. But what we have agreed is that private sector will have access to the fund, as well as the public sector. So I think expect that early next year, on the website of the adjustment fund, there will be clear criteria. Thus far, we have raised $1 billion. We think we can raise more over the next year. Our target is to raise up to $10 billion for SME support. But of course, it is a drop in the ocean. But you also cannot boil an ocean. So we have to start somewhere. It's a good start, and we will make sure that we work together with also our commercial banks. You may be aware that United Bank of Africa, based in Nigeria, we signed an MOU with them of where they commit $7 billion for SME support in Africa to trade under AfCFTA. They have already disbursed $150 million. We want to bring that money southwards to make sure that from this pot of support, there's access by the entire continent. So these are some of the steps that we are taking. I emphasize the continent is huge, many private sector needs, but we must start somewhere.
I understand, Secretary General, that this agreement is meant to ensure that countries try and save on the costs of buying or importing and exporting. But how will you harmonize the payment system? I'll just make an example. Some business people are complaining that the value of some currencies depreciate fast. An example could be we are selling something this week and we make an agreement with that business person, and when it's time to pay next week, the value of that currency has depreciated. What will happen there? Do you have any control over that?
On payments, we have two options as a continent. We can continue to trade using a third currency or third currencies, the yuan, the dollar, the euro, and continue to pay about $5 billion annually, the cost of currency convertibility. That's one option. This option, of course, it increases the cost of trade in Africa. Because if you are an SME and you first have to buy the dollar before you can trade with somebody in Nigeria, that increases your cost. So with Afreximbank and the African Union Commission, we have introduced, as you correctly said, the Pan-African Payment and Settlement System. The rate of currency exchange, we don't determine that. We still leave it to the Reserve Bank, the central banks to do that. But you will note that the cost of trading using PAPs is about 80% cheaper than if you were using SWIFT or any other international currency exchange platform. So you trade in local currency using emalangeni. Your counterparty in Nigeria will receive the Nigerian naira. The rate of fluctuation, whether the currency is floated of Nigeria, for example, whether the currency of your counterparty is floated or pegged, that's not really for us to determine. That is still for the central banks. What we do is to facilitate and provide a platform for reducing the cost. The third important part is the transactions are instantaneous. So we reduce the cost, digital platform, instantaneous transactions. If your counterparty is in Nigeria and you want to trade with them, previously you would have to use maybe a correspondent bank in London. So imagine you fly from Eswatini to London to then fly to Nigeria to pay your counterparty. So now we provide a seamless payments platform. But I do want to emphasize that the monetary policy, whether the currency fluctuates or is pegged to a third currency, that is not our mandate, and it should not be. It will always continue to be the mandate of central banks.
How have you structured the agreement, Secretary General, to ensure that it is gender inclusive? We know that inclusive growth trade can perpetuate gender inequality, or it can be a catalyst for promoting gender equality.
One of the first things that we realized in 2020 is that if we want to succeed, we must have an inclusive trade agreement. That's why the Ministers of Trade recommended to the Assembly of Heads of States and Government the Protocol on Women and Youth in Trade. It is the first of its kind around the world. There's no other trade agreement that has a protocol on women and youth in trade which is dedicated to and committed to eliminating barriers to trade across regions for women and youth. That protocol will ensure that there's preferential market access for these designated segments. So we have done something about it. Of course, more work needs to be done, but we have the starting point is the legal foundation for that process to unfold.
Analyzing the agreement, Your Excellency, it has been evident that connectivity remains a major challenge between the countries that will trade under the agreement. How are you planning to overcome this hurdle?
On connectivity in Africa, I absolutely agree with you and concede that this is and particularly for moving cargo, it is extremely difficult. We had a very good discussion with Ethiopian Airlines on a few days ago, I think on Wednesday before I came here, on exactly how we can use African Airlines, their capacity to reduce the cost of cargo. As you know, currently on the continent, it is only Ethiopian Airlines that has the access into almost 45 countries that they fly into. We would encourage more airlines, Kenya Airways, South Africans Airlines, Eswatini Air, to look into how and work with us, how we can improve access to cargo connectivity on the continent. So I would think that if the small medium enterprises in the kingdom identify specific opportunities, I am 100% confident that we can access those markets. I don't share the view that the private sector in the kingdom is not ready, because we were here in May, as Honorable Minister said. We spent the entire day with the private sector, and they told us what the challenges are. So we do know that the capacity and the desire to export is there, but we have to work together to make sure that they reach those markets. This is a very significant challenge for intra-Africa trade. The World Bank estimates that Africa's intra-Africa trade deficit is over $150 billion annually. It's a deficit, but it's also a challenge, a positive challenge for more investment in trade supporting infrastructure. We are a trade secretariat, so we don't have a balance sheet. We don't have investors. We don't have. However, we leverage on the support of our development finance institutions, African Bank and AFDB, to invest more in trade supporting infrastructure. So we do recognize that we will have to tackle this challenge. It's going to be an ongoing challenge because the continent is vast, 55 countries. So it's not something that will happen overnight. But I don't think that we should sit back and wait until we say, okay, now we have solved the infrastructure challenge. It will continue to be an ongoing challenge. But I do recognize that it has upward pressures on the cost of transport and logistics.
You have been at the trade fair, Your Excellency, and you've seen the businesses and what they are showcasing there. How can we take advantage of this opportunity just to attract other countries so that they may come and see what small and medium enterprises in the country are doing?
I think one idea would be to develop some complementarities between the Kingdom's trade fair and the Intra-Africa trade fair. The Intra-Africa trade fair happens every 2 years. The last edition of it was in November last year in Cairo. Over $42 billion worth of transactions and about 13,000 exhibitors. So we believe that we can work with the Advisory Council of the Intra-Africa Trade Fair, of which I am a member, to make those complementarities with the Kingdom's trade fair. Next year in September will be the Intra-Africa Trade Fair. It will be convened in Algeria. So we can look to see how do we make sure that there are exhibitors from the Kingdom who fully participate, whether it is services providers or manufacturers of goods, but who fully participate in the Intra-Africa Trade Fair. And we have some time between now and September next year to plan effectively, and then going forward year on year for participation in that trade fair. That's one way in which we can explore and the complementarities that we can develop. We normally invite countries to have country booths and country stands in the trade fair or the Intra-Africa Trade Fair, and we do so exactly for the reason that you mentioned, that there are national trade fairs that exist, and so we encourage those national trade fairs to be part of the Intra-Africa Trade Fair.
It's been a pleasure having you, Your Excellency, and we are hoping that the African Continental Free Trade Area Agreement will boost the intra-African trade and eliminate poverty. Thank you. We appreciate you being here.
Right, stay with us. We'll go for a net break. When we return, we'll speak to Zama from Nedbank about solar financing. Welcome back to Eswatini TV. You're still watching Nedbank Business Watch, and today we're diving into a topic that is not only timely, but is very, very crucial for our future: solar energy. Now, as the demand for sustainable energy solution continues, it continues to rise, by the way, and Nedbank is still at the forefront, offering innovative solar financing options that cater to the diverse needs of individuals, of businesses, and as well as of communities. I beg your pardon. They have tailored loans that are competitive, and they have interest rates and comprehensive insurance. Nedbank is making it easier than ever to embrace solar power and enjoy the benefits of reduced energy costs and a smaller carbon footprint. Joining us today is Zama Dlamini, Head of Branch Networks and Personal Banking at Nedbank. Not a stranger to the screen by now, I'm sure. She's going to discuss how their solar financing solutions are driving sustainability in Eswatini. Zama, a very, very good afternoon to you. Welcome to the program again for the I've lost count. I want to say for the fourth time, but I remember we also had you for the trade fair a year ago, I believe.
Last year, yes.
Which is funny enough because right now the trade fair is currently on. But anyway, that's not
going.
the conversation. Let's talk about solar financing. I'm interested in this myself because I love what, we are doing in terms of reducing our carbon footprint and making sure that we go green. You have introduced, and that is Nedbank, not Zama. Nedbank has introduced a range of tailored loans specifically for solar energy projects. Can you walk us through this? How do these offerings, enhance, or rather, can you explain how they cater to the unique needs of individuals, of businesses, as well as communities?
Afternoon, Guni. Thank you once again for having us. So yes, we have introduced some tailored solar financing options for our clients. What this means is that we have actually delved into our suite of asset-based or credit offerings across the bank. What we do is we look at the customer's specific needs, and we've integrated them into the products that we offer. That is against our urban home loan, so that will be title deed land, rural home loan financing. That is against emakaya in terms of a structure that you have there or your home, as well as asset-based financing and personal loans. So what we mean by integrated in this sense is that essentially the customer will be financed by Nedbank. They would have their needs assessed in terms of their solar requirements.
Right.
My solar requirements ayashiana, and our needs vary. As you mentioned in your question, to say how does it offer the specific unique needs to the customer. My needs may vary from yours. So the spectrum of the offering is quite broad.
Okay.
We are going into the period where it's rainy, it's summer, we have blackouts, we have power outs. Needs vary in terms of what the customer would require. From an individual's perspective, it may be that you would want water preserved in terms of heat. That would be solar paneling, as well as geyser heatages. Corporate or an SME might also want continuation of power. That would be a different kind of offering in terms of battery life, plugs availability, and sustained or continued access to power. So the intention of offering this through our product suite is to actually ensure that we cater for the flexibility within a customer's requirements. To say, as an example, if you include it in your urban home loan, the tenure or the period in which you would repay is obviously extended in that regard. And if you include it in an, what we call asset-based finance, or more like vehicle asset finance in the structure of it, is that the term would then be reduced in alignment to that. Maybe it's 5 years or 6 years or 7 years repayment in that regard. And what we would then do is that we would make sure that it's actually insured comprehensively, the gadgets.
So I would ask you how you stand out in the market, because the market looks to be a competitive market right now. But I think you've done a pretty good job of selling that even to me, just as Sifiso. The fact that you assess everything, the fact that, the repayment term becomes as conducive as you've already pronounced. But I also wonder then how does interest rates speak to it? Because I would want to assume there's also an interest rate benefit to it.
That's correct. The interest rate benefit is always expressed to say it's relevant to the customer's requirements, unfortunately. The pricing remains competitive. Interest rates, our pricing is related to the interest rates, and as a result, that's why we speak of the tenure in terms of the product offerings, to say your interest rates will be competitive and possibly substantially reduced if you take up our solar products on the home loans, as an example. But the customers do have the leeway to actually take it up as a personal loan, which means that the interest rates might become a little bit increased, according still to the customer's affordability as well. So I think we have given the customer the opportunity to actually engage in terms of finding out their needs. And further to that, we've made it seamless for our customers. We've partnered with solar service providers who are primarily banked with Nedbank. We are not exclusive or preclusive. We are open to engaging with other businesses that offer this offering to partner with the bank, in the sense that when the customer is engaging with the bank, we do link them with that service provider who would go to their place of residence to assess the needs and come up with a quote, after which we then sit down with the client and also unpack some of the benefits that they can get in terms of the pricing, the financing, but the overall benefits and cost saving or electricity costs and or having increased disposable income may be medium to long term for the customer because of the initial upfront costs of setting up. But thereafter, I think customers would have peace of mind. You know that should any eventuality happen, you are sustained. We are not contributing to the carbon footprint, as you mentioned it. We are a green bank. We are promoting sustainability. And
no pun intended.
and ultimately, we do want to actually expand the offering all through the sectors, not just households. As we've spoken, we do also promote good in our communities as well. So in the agriculture space, we are also looking to see where this solar products and efficiencies can actually come in to support our clients, whether it's in irrigation, whether it's in agriculture, and also commercial businesses as well, to say how then do they supplement some of their operational costs using this type of power.
Maybe in the spirit of repetition there, for the benefit of the viewer, I think we ought to appreciate how extensive their integrated approach is. Rural homes, urban areas, communities, farmers, everything. How intentional is that, Zama, if you will indulge me on that?
I think we are quite intentional. As I've mentioned, we do promote the sustainability. I think we also want to see our customers living in ease and within their comfort in terms of their spend and affordability. We've also seen that the costs of electricity continue to rise. The cost of living for the ordinary customer and businesses also continues to rise. So we have decided to stand in the gap to say, how then do we support our customers? The integrated approach as well in exploring all our product offerings and partnering with solar providers is to ensure that this process is seamless for any customer that engages with us, and any customer that would be interested in finding out. We are partnering intentionally, as you mentioned, to understand what the benefits will be that the
Yeah.
customer could derive, and also to understand the technicalities of how it really makes a difference in your life.
Yeah, this insurance cover, by the way, very comprehensive. I think we can deduce that from everything that you are saying. But we also do want to be awake to the fact that there's quite a lot of insurance companies. You could have literally partnered with all of them if you wanted to, or say most of them, but there's a particular one that you chose to partner with. And I suppose, you could elaborate on how this one safeguards clients' investments and the specific risks that it covers.
Okay, so we have gone comprehensive insurance cover. There are multiple or varying types of insurance covers that are available in the market, and we have partnered with Eswatini. Eswatini is offering this product, which is the comprehensive insurance. And the reason for that is because we do want to provide assurance to our customers as well. We do want to give them peace of mind that once they've installed this solar product, whatever they decide to take up, they have some level of comfort that should anything happen, the comprehensive insurance will come into play or will cover them for any eventuality. So what the comprehensive cover actually ensures is any natural disasters, theft, any damage that might have happened. And this is just to ensure that any eventuality, as I mentioned, that does happen, we are able to replace the gadget as soon as possible through the service providers we've partnered with, and ensure that we make that process for the customer seamless as well.
Right, Zama. One can't help but notice the strategic partnerships that you have with SMEs and corporate clients, so to speak. And it's funny, right now, this interview is coinciding with what is happening at the trade fair, that is the International Trade Fair, which also has a big focus on SMEs and, just growing the corporate industry in Eswatini based on innovation. And this particular product, solar financing, is exactly that. If you will just speak to me about your stall there right now, which SMEs and corporate clients can, I suppose, go there and look at and obviously want to support. And in turn, they're supporting their businesses, I suppose. Talk to me about these offerings as we can see the visuals.
So, yes, you're quite correct in terms of the intentional strategic partnerships with our SME clients as well as corporate clients. And we encourage for more SME customers to partner with us, open accounts with us.
Yeah.
The actual intention of partnering with them is to grow their businesses and also to help them operationally reduce their costs.
Yeah.
We also understand that the partnerships with these types of companies assist us as a bank as well. As you know, we are not necessarily experts in the field of solar.
Yeah.
We are experts in the field of finance and how to handle your finances. So for us, it was very important that we actually partner with these types of service providers and these types of clients to sustain their businesses and also leverage off of their skill sets in that regard. So the partnerships works to everyone's benefit. It's advantageous for everyone in the sense that, of course, the quality of the installation or the actual products that the customer will get, we would be comfortable that, the service providers or our clients actually know what they're doing, and they're quite conversant and experienced in this field. So that then is actually the assurance in terms of quality of the provision of the services, and it gives the customers a level of comfort to say the bank has partnered with people who have been in the business and know exactly what is required in terms of meeting their needs.
Absolutely. What I'm picking from these visuals is that a lot of these customers here that are there, and it's so good that we can actually see the activity there. The customers are nodding their heads, they're inquiring, and you can see that they're listening attentively to the Nedbank personnel. And I want to ask, because I want to believe that you also assist them in, getting their quotes, right? Is that so?
We do assist them to a certain extent. So the partnership in terms of how it would work with our service providers or how it works with our service providers is the customer will inquire with us. We would link them up with a service provider of their preference. They would then obtain the quote and they would come back to the bank for us to actually calculate in terms of their affordability, their tenure, and all of that in terms of what they prefer from our credit product suite. Alternatively, the customer can obtain a quote independently of any of the service providers we've partnered with and approach the bank to request for assistance, financial assistance in the execution of the solar product.
Yeah.
Yeah.
All right, Zama, we are really, really thankful for this particular service. And I'm not just thanking you as Safiso or a journalist or Eswatini TV, but as the whole nation, really, because this is a product that I suppose the whole country urgently needs, and making it easier for anyone that is really interested in it. And I suppose that becomes very crucial, especially in this very busy world now. If you can, sit at home and know that I have NetBank literally holding my hand and walking me through everything that I'm doing in getting my home or my business or whatever it is that I'm trying to get solar financed, done that to it, solar financed. Thank you so much for doing that. Appreciate you on the show. We hope that even at the Trade Fair store, Sive Samaswati Stakuages Hambe, Siegao Enquirisha, the NetBank store, where is it found, by the way, at the Trade Fair, if you will indulge me?
Our NetBank store is in the main hall.
Okay.
We are found there, and we do encourage customers to visit our stand to inquire further about the solar financing options that we are providing. We also encourage our customers to visit our branches, any of our branches. They can also contact us via our call center, which is 3278-1999. They can also email us on our help desk, which is helpdesk@netbank.co.za. Further to that, you mentioned the walking the journey with the customers. They can inquire on the app. We have our app. They can put in an inquiry on the app in terms of any of the products that we may offer or any inquiry that they may have. We will receive it and we'll be able to actually get back to the customer and walk the journey with them, as you mentioned.
All right. There you have it. You've had it all when it comes to solar financing. Just make the right decision. It's very, very easy. You don't even have to go to the branch. If you can go through the app, interact now in my app, and I've used the app myself. It is very user-friendly. So make the right decision. Get your home solar financed or whatever it is. Is it your business? Whatever it is, really. Just make the right decision. Thank you, Zama. Thank you for staying with us on the program. We'll go for a net break. We'll return shortly.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with NetBank Private Clients.
All right, welcome back. You're still watching NetBank. All right, welcome back. You're still watching NetBank Business Watch, where we keep you informed on the latest developments that impact your finances and business operations. And today, we're focusing on a significant update concerning cross-border electronic funds transfers, EFT, if you will, within the Common Monetary Area, which includes South Africa, there's Namibia, there's Eswatini, and Lesotho. As of September 10, 2024, all low-value cross-border EFTs will be processed through SADC real-time gross settlement, I beg your pardon, promising faster and more efficient transactions. Now, this change, driven by the Central Bank of Eswatini and the CMA Cross-Border Payments Oversight Committee, will have notable implications for both credit as well as debit transactions. Here to shed light on what this means for you and how to navigate these changes, Njabulo Kametse, Manager Global Trade and Payments. A very good afternoon, Mr. Kametse. If we will, if just you could start at maybe explaining the current process for cross-border electronic funds transfers and what exactly will change in the new system.
Okay, no, thank you so much, Mguni, and thank you for having me, and good morning to your viewers as well. Regarding the change, maybe one would firstly just highlight what the change is.
Right.
Yeah, so basically this is a change which is at the backdrop of our regulatory compliance, which was a determination which was issued by the Central Bank of Eswatini together with the central banks within the common monetary area, that being Lesotho, Namibia, and Eswatini. Yeah, in South Africa. So the current process of doing electronic funds transfer was currently being done via the South African retail payment system, which had a bit of limitations in as far as complying with the international standard, because they were now viewed as South African transactions, yet there are transactions between South Africa and the other CMA countries.
Yeah.
So that was a bit of a contravention in as far as the international laws of money laundering and terrorist financing is concerned, because one of the key recommendations by the FATF, which is the Financial Action Task Force, which regulates cross-border transactions and also makes determination on financial crimes and also money laundering issues. So that was seen as a bit of a non-compliance, so hence the need, the need to clearly demarcate between the cross-border activity between all these countries. Hence the need to sunset or cease to use the current rail, which we as Nedbank, we have been so of course the central bank then availed the possible payment rails that we can use, which will foster compliance and secure payments for clients. So those one of the rails that were availed to us was the Sadaka TGS, which is also a current rail that exists within the market, and we use it for also our high value payments.
Yeah.
So for the low value, we'll also use that as well. So that's basically the change in as far as the processing is concerned. The low value transactions, the EFT transactions, will now be processed via the SADC RTGS.
It's an interesting development, and I'll tell you what, in as much as it is interesting and charming, one wants to ask, though, the impact that it has, particularly on clients. That is bound to happen, particularly those that are involved in policy collections in South Africa. How should those clients prepare for, say, these changes, and what should they expect going forward?
Okay, no, thank you for that, Mguni. So what our clients can expect, especially the ones which were collecting debits directly from Eswatini, because we know within the common monetary area there's free flow of funds. So we had clients who had policies in South Africa, in your companies, as the different investment companies in South Africa. So previously they were doing direct debits into Eswatini Nedbank clients. But this directive now is clients will cease to the companies in SA will cease to make direct debits. So what we have done is that the policies won't be affected. They will still have their policies in place but the thing, what's changing now is that the companies who were directly making the collections from SA will now have to open accounts in country to make the payments locally, and then they can transmit them back to South Africa. But the debit has to happen locally. Yeah. So what we have done for our clients who hold who were previously having debits from outside from South Africa, we have partnered with their clients, with the companies from South Africa, to open accounts in country for ease of collection, just to minimize the impact on our clients.
Okay.
So rest assured, come the 10th, if you had a policy in place with one of the companies, we have definitely made the
Okay.
the necessary steps that they've opened their accounts and they will be collecting. So their policies won't be affected at all.
Well, this arrangement is also good for new business, I suppose. I wonder, though, because with such developments, and I suppose from the client's perspective, the biggest concern is always speed and efficiency. Is there something that we should expect once the system goes live in terms of how will cross-border payments now be processed on these digital platforms? Is it going to be, speedy and efficient?
Absolutely, Mguni. So this payment is not this payment rail we are transitioning to is not it's an existing platform.
Okay.
So it's more of a secured payment platform, which will of course through the CPL we call it a continuous processing line for the low value. So clients will now enjoy instant debits for their EFTs made to South Africa, because that's a continuous processing line. So transactions will be processed much more quicker and much more faster, and also they will be secured, given also the compliance that comes with that rail, and also its reputation from an international standard.
All right. Jabulo, thank you so much for joining us on the program. By the way, I just want to, again, remind our viewers what they just enjoyed in terms of insight from Jabulo, the impact on your finances and business operations made easy. Today, we're just focusing on the significant update concerning cross-border electronic funds transfers, EFT. Thank you so much for staying with us on this particular segment. The show is not over. We go for a net break. We'll return shortly.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Welcome back. You're still watching Nedbank Business Watch. We're getting into our markets update, and we do have Toba in studio. He's the Treasury Sales Manager under the Treasury Sales Department with Nedbank. Toba, good afternoon to you. Welcome to the program. Today I want us to start by looking at the foreign exchange. I believe we do have our graphic ready. The USD SZL up by 0.35%, currently trading at, what is this, 17.9, if you will, while the Euro SZL has gained 0.25%, again standing at 19.7. On the other hand, we do see the GPP that are slightly dipped by 0.003%. I just wonder, with the rand facing mixed reactions against major currencies, what key factors are driving these movements?
Right, thank you, Swiso, and good afternoon to your viewers as well. So yesterday, we saw the rand weaken to about 18. So South Africa released their second quarter GDP numbers, which showed that the South African economy grew by 0.4%, and that was lower than what market was expecting. Market was expecting 0.5%. So that is what we are seeing. But today, rather, we've seen the rand gain a bit of strength, as you've mentioned, that it has gained a bit of strength against the euro and the dollar. So it's just sentiments mainly, and on both sides, because also in the US, there's quite a lot of information or a lot of data that is coming out that is unfavorable. So there's a bit of weakness on both sides. You've indicated 17.91 on the against the USD, 19.79 against the euro, and 23.49 against the pound. So it's mostly, it was driven by the GDP numbers that came out yesterday.
Really, really interesting. And I suppose from what you've just told us, businesses in Eswatini should at least know how to navigate this forex landscape. I want us to look into commodities now.
Yeah.
I'm seeing here that gold is holding steady, inching up by 0.12%. Yeah. That's per ounce, by the way, while Brent crude oil has slipped by 0.53%. I wonder, in a global market marked by fluctuating commodity prices, the question I suppose then becomes, how should investors position themselves to at least mitigate risks and capitalize on potential gains in this uncertain environment?
All right, so as you have mentioned, gold is up at 0.12%, trading at 2,495.80 per ounce.
Yeah.
So gold is a safe haven metal for investors that are risk averse. So I've mentioned that the US economy is showing signs of weakening.
Yeah.
Yesterday, the Institute of Supply Management released a report on manufacturing, and it showed that manufacturing shrinked in the US. So then investors then look at safer options to put their money. So
Yeah.
gold then becomes an option. So that's why the price of gold has ticked up. And then from a Brent crude perspective, so oil is down. It's all about supply when it comes to oil.
Yeah.
With the US economy sluggish, as well as the China economy, then that means there is less demand for oil, and that then pushes the price down. But as well, we also got a report that Libyan supplies may be restored.
Okay.
The conflict between the two factions and government there is sort of coming to a close. So that means more or the supply from Libya will be restored. So all of that is then weighing down on the price of crude oil, because it means more supply in the market with the limited demand that we're seeing.
Yeah, and might see the less prices for oil, I suppose,
Yes.
which could be really good for vehicle owners. Equities, market has seen significant declines, with S&P 500 down by 2.12%, FTSE 100 by 0.78%, JSE All-Share Index by 1.9%. Really, really interesting. With these major indices taking a hit, what does a signal perhaps for investors? What does this signal for investors? That's the first question, particularly those with exposure to these markets.
Yeah, so it ties back to the sluggish economy in the US. So with the numbers that are coming out, so the fundamentals that are coming out, showing that the economy is slowing down, then investors are sort of not putting their money into riskier assets. So as you've mentioned, all the indices are down. The S&P 500 significantly down 2.12% at $5.5. What is driving that? Well, the significant driver there was NVIDIA, the leading chip manufacturer in the US, which dropped 10% yesterday, shedding about 300 billion of its value. That was due to the sentiments in the market. It was also due to their growth forecast. So they released their growth forecast, and they showed that even though they are growing, but their growth is going to be limited going forward. So then that resulted in that decline. The FTSE also down 0.78% at 8.2 thousand pounds. Leaders there were mostly on service. I think which then speaks to just the economy being slow and consumers also just struggling to make end meets there. So it is a red day for equities today.
Yeah, a sign of broader economic challenges, one would say.
Yeah.
But perhaps just a quick answer on this one question. Could there be an opportunity amidst this downturn?
Definitely. I'll probably point to currencies mostly. As a country, we are a country that is a net importer, but we also do have exporters. We export sugar, we export citrus, and all of that. So if the rand is weakening, so if you are getting more emalangeni for rands, then it means you are getting more money for exports.
Makes sense.
So it depends on which side of the coin you are on, but there are definitely opportunities.
Really interesting field economics are. You have to be smart on how you move. It's like
Yeah.
playing chess, really. Thank you so much for Toba. Invaluable insights from the Treasury Sales Manager from the Nedbank Eswatini. Thank you for staying with us.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.